Folks, if you're looking for stocks that have every reason to explode and to make you rich just by investing a few $100s in it, then this video is for you. These are the best value stocks to buy according to billionaires, companies with strong balance sheets, real cash flow, breakthrough innovations, and strategic vision to grow in any economic climate. So today we are diving into 3 of the best value stocks to buy according to billionaires. These are not random penny plays or meme stocks chasing short-term momentum. These are well-established companies backed by world-class management, growing revenue and profits consistently, and most importantly, trusted by some of the most successful investors of our time. Their financial fundamentals are rock solid. Their future is packed with growth catalysts, and their stocks are still underappreciated by the broader market. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is EOG Resources Incorporated, traded on the New York Stock Exchange under the ticker symbol EOG. EOG Resources is one of America's largest independent oil and gas producers, known for its disciplined capital allocation, innovation in shale development, and industry-leading returns. The company is involved in exploring, developing, producing, and marketing crude oil, natural gas liquids, and natural gas primarily in the United States. What sets EOG apart is its ability to generate outsized returns on capital while maintaining a fortress balance sheet, something that has consistently attracted the attention of billionaire investors looking for energy exposure without excessive risk. Recently, EOG announced a game-changing acquisition that has the industry buzzing. In a definitive agreement with Canada Pension Plan Investment Board and Encino Energy, EOG will acquire Encino Acquisition Partners, EAP, for $5.6 billion, including EAP's net debt. The acquisition is structured with $3.5 billion in new debt and $2.1 billion from EOG's cash reserves. This is a highly strategic move. It significantly strengthens EOG's position in the Utica Shale, giving the company a third foundational play to complement its massive operations in the Delaware Basin and Eagle Ford. With this acquisition, EOG expands its net resource base to over 12 billion barrels of oil equivalent, positioning itself as a true powerhouse in multi-basin development. Looking at the financials, EOG is in exceptional shape. For the most recent quarter, the company reported adjusted net income of $1.6 billion, with free cash flow of $1.3 billion. Adjusted earnings per share came in at $2.87, and adjusted cash flow per share was $5.09. These figures highlight EOG's efficiency and profitability at a time when many energy companies are still playing catch-up. The company has returned $1.3 billion to shareholders through dividends and stock buybacks, continuing its streak of nearly $5 billion in share repurchases over the last 9 quarters, which has reduced the outstanding share count by 7%. At the end of the first quarter, EOG had a cash balance of $6.6 billion and long-term debt of just $4.7 billion, showing strong liquidity and low leverage. The company is also planning a $6 billion capital expenditure program in 2025, emphasizing reinvestment and growth. EOG's operational momentum is just as strong. Oil production grew by approximately 2% year over year, while natural gas production increased by 12%. And on top of that, the company completed a $275 million bolt-on acquisition in the Eagle Ford, adding another year of drilling inventory. EOG's current stock price sits at around $121.24, and the average 12-month price target from 21 Wall Street analysts is $141.20, with a high estimate of $170. That's nearly 15% upside on average and over 40% upside from the more aggressive forecasts. Now moving on to the second stock on our list, we have Regeneron Pharmaceuticals Incorporated, which trades on the NASDAQ under the symbol REGN. Regeneron is a biotechnology company known for developing cutting-edge treatments for serious medical conditions using genetics and targeted therapies. Its most prominent product, Dupixent, has become a multi-billion-dollar franchise and a cornerstone of the company's future growth. What makes Regeneron so attractive is its combination of blockbuster drug development, strong financials, and a growing pipeline of innovative therapies. This is a company that doesn't just ride the biotech wave, it creates it. In its most recent milestone, Regeneron and its partner Sanofi received FDA approval for Dupixent to treat bullous pemphigoid, a rare and debilitating skin disease. This approval marks yet another expansion for Dupixent, which is already approved for a wide range of conditions including asthma, atopic dermatitis, eosinophilic esophagitis, and prurigo nodularis. With a bullous pemphigoid approval, Dupixent now reaches an even broader patient population, and the data from its ADEPT Phase 2/3 trial showed promising results in terms of disease remission and reduced need for steroids. This isn't just good news for patients. It's a strong signal that Dupixent will continue to drive double-digit sales growth for years to come. In the first quarter of 2025, Regeneron reported total revenues of $3.0 billion. GAAP diluted earnings per share stood at $7.27, while non-GAAP EPS was an impressive $8.22. Dupixent global net sales recorded by Sanofi grew 19% year-over-year to $3.67 billion. The company also saw a 54% increase in U.S. sales of Eylea HD, even though total Eylea sales were down due to pricing and competition. Regeneron's pipeline remains robust. It gained approval in the EU for Linvoseltamab in multiple myeloma, submitted regulatory applications for Libtayo in skin cancer, and continues to invest heavily in infrastructure. Over $7 billion is planned for manufacturing and development expansions across New York and North Carolina, signaling long-term confidence in its product roadmap. Regeneron stock is currently trading around $554.58. Analysts are optimistic, with the average 12-month price target set at $717 and some estimates going as high as $900 per share. That's a projected return of 28% on average and over 60% upside from the high-end target. Last on our list is Amgen Incorporated, traded under the ticker Amgen on the Nasdaq. Amgen is one of the world's leading biotechnology companies, with a massive portfolio of marketed therapies and a growing pipeline in high-impact disease areas like obesity, oncology, and cardiovascular medicine. Billionaire investors love Amgen for its consistency, pipeline strength, and reliable earnings, traits that become even more valuable in volatile markets. One of Amgen's most exciting developments is MariTide, a long-acting GLP-1 receptor agonist for obesity and type 2 diabetes. In its Phase 2 clinical study, MariTide showed up to 20% weight loss in non-diabetics and 17% in those with type 2 diabetes, vastly outperforming placebo. Even more encouraging is that the weight loss did not plateau after 52 weeks, suggesting continued effectiveness. Beyond weight loss, MariTide also delivered significant improvements in blood sugar control, reducing hemoglobin A1c by up to 2.2%. The product's monthly or less frequent dosing could be a game-changer for patient adherence compared to current therapies. Amgen had a strong first quarter in 2025, with total revenues increasing 9% to $8.1 billion. Product sales rose 11%, driven by 14% growth in volume. 14 different products delivered double-digit growth, including Repatha, Blincyto, Tezspire, and even their new launch Imdelltra, which generated $81 million in its first quarter and is now available in Japan. GAAP EPS came in at $3.20, rebounding from a loss last year due to favorable equity investments and offsetting a large impairment charge. On a non-GAAP basis, EPS was $4.90, up 24% from the prior year. The company also grew its non-GAAP operating income by 16% to $3.6 billion and nearly doubled free cash flow to $1.0 billion. Amgen stock currently trades around $301.37, with analysts setting an average price target of $324.24. The high forecast reaches $400, implying potential upside of up to 33%. Amgen is positioned at the intersection of innovation and stability, offering investors the potential for significant returns while minimizing downside risk thanks to its proven product base and reliable cash flow. Well, that concludes our list of the 3 best value stocks to buy according to Billionaire investors. These aren't just popular names. They are powerhouses in their industries, backed by strong financials, strategic acquisitions, breakthrough products, and bullish forecasts from top Wall Street analysts. Whether it's the oil-rich balance sheet of EOG Resources, the blockbuster drug pipeline of Regeneron, or the obesity-focused innovation at Amgen, each of these stocks offers a compelling case for long-term investors. So if you're looking to build wealth and invest alongside the smartest minds in the game, make sure these names are on your radar. Don't forget to like this video, subscribe, and turn on notifications so you stay updated on all the best investment opportunities before they go mainstream.